This is For Advisors by Advisors. I'm your host, Evan J. Mayer, and today we have a very special guest in Mrs. Jillian Altamura. Hey, Jillian, how are you?
How you doing?
So Jillian is the managing director for iCapital. iCapital actually just bought Simon Markets. How long ago has that been?
Back in August, actually, August 1st.
August, so pretty new. Jillian spent her first 7.5 years in the business at Goldman. She was an intern, associate, then an analyst, then a vice president, moved over to Simon Markets, and then this huge situation happened. So congratulations.
Thank you very much. I'm very happy to be here, by the way, so thanks for having me.
Absolutely. So tell us a little bit about your history in the business, how you got started. What was Goldman Sachs like?
No, it's a great first question to hit right out of the gate. It's funny, as I like to say, I grew up in the structured products world. I grew up in the structured investments business. I was an intern in 2010 with the same team and the same people, funnily enough, that I've spent my entire career with. Fell in love with the product, fell in love with the placement of the product at the firm. What was cool about Goldman at the time, and obviously continues to be, is that they had structured investments living in this pocket of equity derivatives on the trading floor. So we got a lot of trading experience. We got a lot of sales experience. We had a lot of autonomy in how we operated as a team. So spent my, like you said, 7.5 years growing up in the derivatives world. Found a really nice love and appreciation for the product line and for the clients that we were able to serve with it. And then enter Simon. We sat back in 2013 and realized that this business wasn't going to reinvent itself. We needed to do that and force change to make things more efficient, to make things a lot cleaner for advisors. And that was how the idea behind Simon came about. And 2018 came, we spun off from Goldman, and we've been off to the races ever since.
So you actually were an intern there for 3 months. That you were with the team, they loved you, and they're like, hey, we want to offer you a full position. You took over that position. And then you helped build Simon within the Goldman Sachs infrastructure. Is that right?
Yeah, that's right. I was an intern in 2010, met the team. That was it for me. The internship at Goldman, it's funny. It's a lot like dating. I feel like you go around, you meet a lot of different people, you find the right fit. And for me, this was a two-part fit. This was a product fit, but before that, it was a people fit. Just really enjoyed the team. Started there in 2011 and was one of the kind of founding team members of Simon when the original idea came to be back in 2012.
And how does that work when when you're with Simon, but it's with Goldman? Do you walk into like an office and it has Simon stuff all over the place, or is it all still marketed as Goldman?
Oh, it totally did. We had so much fun with it. We sat on the trading floor with our colleagues in sales and trading. We were out on the trading floor for a solid 3-4 years while we were just building Simon. So 2012 to call it 2015, 16. At one point, we actually were able to garner a lot of other resources around the firm. We had engineers with us. We had product people. We almost started operating like a company within a company. So what we ended up doing is Goldman actually moved us off the trading floor into what we affectionately called the bubble. And the bubble was this corner pocket off the trading floor, still on the same floor as our other colleagues, but we had our own little company within a company. And once we moved into the bubble, so to speak, we treated that like it was our own little office. We had the coffee mugs, the espresso machine, we had the water. We did we tried to create like a startup type feel. We had the Simon logo and branding in that office. So it was great. It was all of the best parts about Goldman, and then all of the fun of being able to get that kind of startup-y type feel.
And how does a spinoff work, at least in this circumstance? So you're at Goldman and Jason's the head of the division, I'm guessing at the time.
He was the head of the structured products group. Yep.
Got it, for Goldman. And then you guys, one day you come in and they're like, you're not part of Goldman anymore and there's an office across the street, or how does that work?
Yeah, we had a little bit more of advanced planning and heads up than maybe that. But here's what happened. 2017 comes, right? And Simon's really taking off, and we have a lot of clients who have been adopting and using the platform, but the same piece of feedback kept coming back, which was, guys, you service structured products for Goldman Sachs really, really well. But as a financial advisor, I buy a lot more than just Goldman product. I buy JP Morgan product and HSBC product and go down the issuer list, right? So the feedback that was coming back from our client base was, in order for this to reach critical adoption and really scale, you need to do way more than just Goldman product. You need to service the whole industry. And at that point, and I give Goldman a lot of credit for this, Goldman was able to take a hard look at the platform and say, I think this could have a lot more success if we lived outside of the four walls of Goldman, where we could really turn it into an open architecture platform. A lot of those conversations were happening in 2017. And then ultimately in 2018, it was the spinoff itself was incredible because we had every competitor around the table having a collaborative conversation around what was best for the industry. And I'd never seen anything like that before in my entire career, to see all of these different competitors around the table being able to be thoughtful and collaborative and come together to make the determination that this thing needed to move out. And that's what happened.
That's awesome. I met you through actually a Zoom call. I got an invite, and I think I had written an article about structured investments that it took me a while to get that through compliance. I never thought that was going to take as long as it did, but they never thought I'd be able to get it approved. We got it approved, and then you guys were launching a new system, and I had gone independent probably a year prior.
Yeah.
And I remember, like, Simon to me was this breath of fresh air. Like, when I turned on the software, I'm like, first of all, there's this little video, like I got to talk about the little Simon guy, right? You got this little stick figure guy who's just very likable, and the marketing behind it was just so phenomenal. And then as an advisor, to be able to experience a dashboard where all the product lines, the clients, when they were maturing, when they were getting called, just the functionality behind it. There are many firms on the street that do not have Simon today, that I'm sure we'll have Simon shortly. But the interesting thing was, when I got here, it made doing structured notes not only easy, but fun to work with clients, and a software that actually was able to do that. Do you ever find it a struggle to try to get, like, for firms out there that don't have it on the platform, to be like, to kind of shake them and be like, you don't know what you're missing out by adding this to the platform?
Yeah, it's a great question, right? I think, first of all, taking a quick step back, I appreciate the sentiment around the usability and the fun of the platform. That wasn't an accident, right? That was 1000% by design. The first thing that we felt was extremely important to us when we were building this platform, and Jason will say this, and he'll continue to say this, he said, I want to make the platform very Apple-like. We were all big Apple people, right? We all had a bunch of iPhones back in the day, and we found like the UX and the usability of any Apple product to be second to none. So we set out to become the Apple of structured investments, which already sounded like a tall order. But truly, everything that we built and tried to deliver always had to be delivered with that very clean Apple-like look and feel. It should always be intuitive to use our platform. That's part one. I think as we went out there and we started talking to prospective clients, and there was always going to be a little bit of resistance for folks who are set in their ways. And we would hear from various folks from time to time, if it ain't broke, why do I need a technology platform to reinvent it and fix it for me? But over time, I think, especially as the platform really took off in post spinoff, and we were integrating with firms deeply and integrating with custodians and really getting into the weeds of different workflows and making them more streamlined. I think a lot of those initial kind of skeptics, if you will, ended up coming around because they realized that, the platform, first and foremost, is super easy to implement at a firm. We can give you the platform out of the box. You don't need to spend on technology requirements or anything like that. So easy to implement. We do all the heavy lifting of getting it set up for you. And it really can have an incredible effect on advisor workflows, but also home office workflows as well. That's another piece that we really spent a lot of time solving for. So over time, I think we were able to take those folks who were a little skeptical of just technology in general and get them on sides by showing them the value that we supplied at different layers of the chain.
And I'm guessing the focus initially obviously was getting the biggest amount of clients on, at a point in time. RIAs, small little firms, that are just getting started. Do you guys have an offering for them as well that makes sense?
Yeah, we do. Absolutely. We actually, a big and growing client segment of ours is the RIA space, for the same reasons I just highlighted, right? There's so many workflow efficiencies and book of business management tools that we offer through the platform that even if you're an RIA who's just getting started with structured investments, there are efficiencies that you can glean from the platform. If you're an RIA that has a big book of business and structured products today, I mean, that would welcome that conversation anytime, because that's between pre-trade trading and post-trade management. There's something for everybody.
And talk a little bit about the iCapital situation. So you guys are humming along, right? I was super excited. I was actually watching you kind of hum along as you were. And then the news broke that iCapital is taking you over. I mean, obviously you were probably involved in conversations prior to that news breaking, but did iCapital just come in with some astounding offer? Or was there such a synergy that you guys saw and you were like, oh my God, this is going to be killer?
Absolutely. It's amazing how that all ended up playing out because we've known about iCapital for years and we've been watching them closely because they operate in the alternative space. And we think about structured investments, not dissimilar from alternative investments. They're under the alternative solutions umbrella. And our mission is simple at Simon. We think about Simon as three core sets of services: education that underpins all of it, a marketplace to transact, and a lifecycle portal or post-trade ecosystem to manage. And as we got to know the iCapital folks, we realized that their mission for alternative investments, so different asset class, sure, but very similar and consistent across those three different verticals. They have an incredible education repository through AI Insights and Alt Edge. They've got the marketplace where you can launch different workflows and transact in the public and private markets. And then they've got a, what I'll call post-trade experience. So it was almost a literal perfect marriage of features, functionality, and honestly, I'll call it mindset, right? We all think about the alternative space in the same way. So it just felt natural to bring the companies together because what we were doing for structured investments and annuities, they had been doing for years in alternatives. And now we can provide any advisor a one-stop shop for all of those three product lines. They don't have to go log into different platforms now to get the same type of business done. So that was the logic behind bringing the companies together.
And Simon, is that going to stay as Simon, or is that going to shift eventually to where it's just an iCapital, part of the iCapital experience?
I think the most efficient way to think about the forward of the companies is what I'll call integrated solution. What that looks like, what the branding is, what logo ends up on there. I'm not sure what those details look like yet. We're only 4 months into this, but excuse me. An integrated platform, a one place for an advisor to go, is in our forward, and it's something that we're spending a lot of time on today thinking about.
And the concept of Apple and the little stick figure Simon and keeping things simple, clean too. I think one of the nice things about Simon is that there isn't 80 buttons to choose from. There's 6 or something. And literally, I'm going to pick one of those 6 and I know exactly where I'm going. Is that concept going to probably stay, in your opinion?
That's the goal, right? We want to make sure that you are no more than 2 or 3 clicks away from anything that you want to do on the platform. That's what we've always solved for at Simon. That's certainly what our new colleagues have solved for at iCapital. And so I think in bringing the companies together, bringing the platform experiences together, we'll end up airlifting the best parts of both platforms: the simplicity, the ease of use, the client accounts and context, and everything that we've always prioritized. I think you can see a very homogenous, consistent experience from us in the future.
As far as the launch of the annuities on the Simon platform, I don't do many annuities today, but I still have a book of business in them. And to be honest with you, annuities, you can get lost in those because you're not going to log on to 10 different websites or 15 different websites to see which annuities you have and when they're going to mature, especially when you've been in the business for quite a long time. Somebody like myself that had $15 million or $20 million in annuity products that we obviously kept in the annuities for some purpose, your platform allows us to see surrender dates, maturity dates, rider costs, values, all kinds of neat things. Talk a little bit about when you guys launched that and where that's going.
Yeah, it was a really, really exciting time for us. I think when we spun out in 2018, structured investments, of course, was our first focus, but we realized that this playbook of education, marketplace access with analytics, and post-trade lifecycle management, I know I've said it before, we realized that playbook works for alternative solutions and that we could apply that same exact framework to the annuities world. And so we have many colleagues who come from decades-long careers in the annuity space. They helped us build out that platform. We launched it, oh gosh, my memory now, I think 2 years after we spun out. So I think it was early 2020 when we came to market with the Annuities Platform. That was like our Simon kind of 2.0 launch where we did this big unveiling of the platform. And it was the exact same set of services. We launched the training, the NAIC training, working with the carriers on that. We launched a marketplace where we hosted different types of annuities and being able to, generate illustrations and a whole host of what I'll call kind of pre-investment analytics. And then we kind of followed that up later with a post-trade experience, being able to see actual client holdings and be able to review, like you said, with kind of a consistent suite of analytics for annuities.
So is that almost something that the firms, like if the firm has the structured and products through Simon with you guys, that's an additional add-on that they have to add on? Because I didn't see it when it first came out. I just saw it like I think a year ago or something like that. So is that like an add-on feature that firms have the ability to add in?
Yeah, so Simon, we now have 4 or 5 different asset classes on the platform, including annuities and structured investments and a handful of others. And the way that it works is it's a choose your own adventure, for lack of a better term. As a firm, when you come on, you can join the platform for structured investments only. You can do annuities only. We have some clients who are just annuities and don't have much of a structured investment footprint, or you can do all of the above. It's a very easy configuration for us. It's very easy and out of the box. And we have some firms that do all of it and some that select among the different asset classes.
And if I could be another spokesman again, I would suggest it all, because any way to make an advisor's book of business more functional and more visible and more opportunistic, specifically firms like that, or should take advantage of it. Let's talk a little bit about Spectrum. It's a newer thing that you guys have created. It's very easy to use, very user-friendly, and it's definitely, in my opinion, as of today, a great starting off point for somebody that's trying to add something new like structured products to their clients, and a great way to explain it to clients, but also show how it fits on a portfolio management standpoint. Talk a little bit about Spectrum, where that came from, and where you see that going.
Absolutely. I would say there were 2 main factors that contributed to the creation of Spectrum. I would say the first and probably biggest guiding factor was that a lot of the portfolio construction or portfolio analytics tools out there didn't really tackle structured investments to start. It was either an asset class that they weren't able to recognize, or that they had historically had underinvested in. And we surveyed the market and we realized first and foremost that there really wasn't anything out there that truly tackled the relevance and the importance of structured investment in client portfolios. That's part one. The second piece, actually, and this kind of ties back into the annuities conversation, is we have this platform, that we built a structured investments business, an annuities business, an SMA business, and now an alts business, right? And we wanted to find ways to bring all of those alternative asset classes together. And Spectrum is that tool, right? Because what Spectrum allows advisors to do is take a look across the spectrum, pun intended, of asset classes, right? And see how a structured investment and an annuity and an interval fund, let's say, could actually come together to optimize a client portfolio. So what was really unique about the tool is, first and foremost, it targeted those alternative asset classes. But secondly, it brought them all together. And so Spectrum at a very high level, it's all about the client in context. It's understanding what the client holds in their portfolio, what their objectives are, and how we can overlay those two to see if there's alignment between the client's objectives and what their portfolio is. And then we look at these alternative solutions and we see whether they can actually optimize the client portfolio. So it's an education tool, it's an action tool, and it really brings all the asset classes together.
Do you ever find it difficult when you like something that the tool is going to do, but you're like, man, I got to get this through FINRA, I got to get this through compliance, I don't know if we're going to be able to do it, and you get the yays or nays and you're fighting through that? Talk a little bit about what that's like, because as a creative, the concept of Simon is make things easy. But then sometimes some of the things that you can show on Simon that are easy, you can't show clients because they're not FINRA approved. The more difficult things are. And it's always a joke in our business that the more complex it is, the more likely FINRA is going to approve it than not. Talk a little bit about that.
It's everything that we built with Simon from day one. I said it before, really. Everything is educational, its foundation. So every feature that we've built over the last several years was built out with education as a bottom layer. Now, I say that because why did we do that? We did that because we knew that we were dealing with asset classes that would be defined by regulators and others as complex. That's the business we grew up in. And I think we had one core strategy that I think has really served us well over these last couple of years, and that has been to work very closely with our legal and compliance partners as we are developing features. We don't have these kind of one-off whiteboarding sessions where we create and then we go and try to seek approval. We bring them in from like actually at the foundational kind of day one, early days, so that when we're building something, we're building it out in conjunction with our partners and not hoping and crossing our fingers that it gets to their approval. That has served us well. So I think about things like building collateral for end clients on the platform or building out Spectrum and other, analytics tools. We had our compliance and legal partners in the room from the same day that we had that first whiteboarding session. And I'd hope to think that we're the beneficiaries of that.
I ask this question a lot of times at the end of a podcast, and it's really like the goal of this podcast is for advisors by advisors. It's education for advisors, but it's more, is there something we can pull? And I think for any of those advisors that don't have Simon on your platforms, my big shout out is beg for it and get it. It's transformed my ability to do structured notes in the way that I'm doing them. It's allowed my clients to be educated and understand them better. And it's also allowed for in my opinion, it's allowed for the industry to flourish. And I think structured notes, they used to be risky type of investments. They are no more, and there are ways to use them. So how to get them on the platform. Is there anything out there that a good piece of advice for advisors that are out there, either using Simon or not using Simon, that you'd like to talk about?
When it comes to structured notes, I would say this. I would say take the time to get educated if you're unfamiliar with the asset class. I think it used to be that you'd Google structured investments and you wouldn't even want to see the articles that came up. And I think we've done a really nice job as an industry over the last several years to break down some of that and help folks understand the merits as well as the risks, of course, in investing in the asset class. The key word that always comes to mind with structured notes for me is customization. And I think that can be an intimidating word to a lot of advisors who are very familiar with other product lines and very much less so with structured investments. So I would say this, for Simon, particularly as a platform, the number one thing we will always gladly give away and give access to at absolutely no cost is the education on our platform. So if you're unfamiliar with the asset class and this is something you want to learn about, please reach out, come to the platform. We will give you access to all the education and start there. That's my unfiltered plug on how to get acclimated, is to start by just learning a little bit more about the product line.
Yeah, and for those that do have Simon and haven't shared the videos that are client approved with their clients, those videos can make your life a lot more simple, especially when you're first explaining it. It's something I actually make clients watch when they're in a meeting with us before we allocate, so that not only before I go over structure notes and how they work, but I let the video do the hard part or the easy part, depending upon how you look at it. So thank you for that. Those have been huge for us to be able to email clients and educate clients.
It is exactly why we built the platform, right? It's education for advisors. It's education for advisors to share with their clients. That's the name of the game for us. So we appreciate it.
And I think Spectrum's going to go to a whole nother level. And I'm really excited for how you started it. I'm really excited to have been part of seeing kind of the behind the scenes of how you guys are tooling it. And I think it's an awesome thing. Jillian, if anybody wants to get a hold of you, specifically if there's any advisors out there that have independent practices or practices where they would like to utilize Simon, how could they get a hold of you?
I'll give you my email address. They can use Jillian.Altamura, I'm going to have to spell that, at iCapitalNetwork.com.
Excellent. So yeah, if you want to get a hold of Jillian, you can email her there or maybe on LinkedIn too. You message there, even better. And you could always reach out to me. Jillian, thanks again for coming on the show. For those of you out there that enjoyed today, please give it a like, and I hope you enjoyed it, and we'll see you on the next one. Thanks so much.
Thanks for having me.